What's different this time?
Well, in a sense, between now and the 1970s, not much. I think, by the way, it would be useful for your audience if they looked at that chart and understood that this is a nominal dollar chart, not a real dollar chart.
Yes.
If you simultaneously adjust the part for the declining purchasing power of the US dollar, the chart looks much, much, much less dramatic. But I also think that two things happened that characterized this bull market. One was an own goal, a self-inflicted wound by the US government on the US dollar, making it difficult for our trading partners and others to continue to use it as a reserve currency. Whether or not you agree, as an example, with Russia's actions in the Ukraine, the United States government stole $300 billion worth of Russian treasuries. Not something that endears itself to governments that might find themselves with the prospect of imposing policies that weren't acceptable to the Americans. And then the weaponization of the SWIFT banking system, which is not a U.S.-controlled asset, to use the dollar to impose U.S. policies on other countries. It is impossible to overstate the importance, I think, of the U.S. government's own actions reducing the strength of the U.S. dollar. I think that really kicked off the rally. The second factor was the realization in the United States and in other countries that the balance sheet of the debtor